Okay, well, good morning, everyone. Good morning, Jeff.
Good morning, Ash, and everybody. And good evening to those of you who are Antipodean, or maybe even in the same longitude as myself.
Yeah, I'm talking of the Antipodean. I'm just hearing about Australian fourth quarter GDP disappointing. I wonder whether that's a state of the trade war scenario that we've seen happening.
Yeah, look, second half of 2018 was pretty shit in terms of the economy ticking over, to be fair. And I don't know why I didn't take advantage of this. Actually saw this one coming. I was listening to those in the know, I'll put it that way, this morning, pre the notification, and they were saying that the economists from all the major banks and those who speculate on such things were drastically um, reassessing that GDP number, and the forecast was way above what they were saying. They were saying 0.1, 0.2. It would have come in 0.2, I think, didn't it? So we saw that coming. I gave a little hint to that in the morning show this morning, and said, "Oh, I wasn't going to trade it," and I didn't. And that's probably just the way it goes. Coulda, woulda, shoulda.
Yeah, well, I'm in a similar position in some respects. Um, I'm just hearing that there might be some calls for a couple of rate cuts this year from Australia. We'll get to the charts in a second, but
Oh, look, I flagged that 12 months ago or 6 months ago, whatever it was. But if I took the time to read Philip Lowe's talk last night about the state of the economy and the housing market in particular. Now he left
yeah,
it with no room for conjecture that he was absolutely sitting on the fence and could see a case for rising interest rates, and he could see a case for falling interest rates. So the RBA is, and their official stance is, they're absolutely solidly sitting on the fence,
yeah, yeah,
and they'll wait and see what data is produced in the
yeah.
meantime.
That does
So
seem to be what's being said. Even though there seems to be a couple more calls for it now. Am I right in saying that? A couple more calls for a potential rate cut? A couple of rate cuts?
I don't think there's any more. I certainly haven't seen or heard of any more than has been in the past 3 or 4 months. So no, I could be
Uh,
wrong. But
just
I thought,
oh, good morning, Mohammed. Mohammed is saying good morning to the two of us. Good morning, mate.
hi, Mohammed. I haven't got my thing up. I'll just do that. Well, I should rephrase that. I haven't got my monitoring device up. So let me monitor those questions.
North Korea said to restore the missile site. So the meeting with Donald Trump didn't seem to go that well. Let's quickly talk about some charts, you mate. I'm going to talk about this FTSE 100 trade very,
Okay,
very
I've got
quickly.
an order. I don't know that we need to rush into it, but no, we don't. So you've got plenty of time.
Yeah, okay. Yeah, give me a heads up on it. I am short from this point. I took a long hedge just above this point, which I took profit on, and I also took another short here, which I've taken profit on. So what I'm trying to do at the minute is balance it, so I don't have to get so far down. I think my break-even point is going to be around about the 45 level, which looks somewhere around about this daily pivot. So if it comes back to the daily pivot, then I've got a chance of taking the trade off as a break even, if you like, or the profit on the 2 days over the two sessions as a break even. There's two indications here that are not in confluence, if you like. So we got the hourly chart, which is suggesting we could be looking for a lower high. It's possible that this could end up as a lower high, which would drag us down to this daily pivot. There's the 4-hour chart, which gives us a slightly different picture. And the 4-hour chart, really, I'm kind of looking at this this line now instead. So I am probably a little bit suspicious. I think the daily pivot looks like this area here is the breakout point, and this might well be a hold point. Coming anywhere below the daily pivot will really help me out, because that means that I'll be in net profit, which I'll be more than happy with, obviously. Yesterday's bar on the dailies would suggest that we probably are going to test these highs now. We got a little bit of a takeout. This is a daily chart. Head and shoulders pattern looked like it was going to play out. 2 days ago, we had this spinning top, which is an indecisive bar. Not a great close above the spinning top, which is just giving me enough to be comfortable-ish with what's on the table here. So there might still be a drift to the downside. Probably the idea will likely be just to let the market go. And I may as well take this take profit line off now, because that's probably going to be cancelled out. Probably let the market go and have a look up at this level and see if there's any way that I can maybe trade against the downside. There might be some intraday trading going on here and there and everywhere. I could have taken a trade to the upside already, really, this morning. I probably, well, not should have, but I could have got in. Let me bring these pivots in. I could have got back in again at this particular point, because this particular point, because of what was happening with the 4-hour chart there, and now we're starting to see that there's, you know, maybe a break and a retest, and probably going to get back to these highs. So there was probably a little bit of a scalp there. Not really what I want to do, though, if I'm honest. I'd much prefer to what's that? I'd much prefer to see if I can just trade again to the downside if we can get back to the highs, rather than worrying too much about these moves in this area, and look to see whether the market will just drift down a little bit first, but not at this stage looking likely. I think upside is much more likely than downside. There's still no meat on the bones when it comes down to the China trade deal, but it certainly appears that that the market likes the chance that there's going to be a resolution to that. So little bit on hold, mate. Probably in the area of hopium, which is not the best place to be, but that's just the way it is. Did you just send me a link?
I did. I'll ask you to open that sometime later in the show and put it on the screen.
Okay.
It's to do with the topic of the day.
Okay, great.
And for some reason, I can't open it.
Okay, no problem. No problem.
So yeah, that's for later.
I'll tell you what. Just quickly on yesterday as well. It couldn't have gone worse for me. There was announcements that were made yesterday. What was it? I think there was some. Oh, there was some services PMI from the UK, which was good. Then there was some data ISM, I think it was from the US, which was good. So the market just kept going. I was going, right, this is when it starts to come down. Unfortunately, and then Draghi spoke. Yeah, well, no, Draghi's tomorrow,
no,
right? Carney, yeah. Then Carney spoke, yeah. So nothing was really helping. The pound was weakening. Nothing was in my favour yesterday, but that's just the way it is sometimes. So just going to have to be nimble with this one when I can. The most irritating fact of yesterday was I took the hedge on this bar, and as the market came up, I took the profit on the hedge, and look, it came all the way back down again. And at this point, I was on my way to get my daughter from nursery, and that would have been the chance to get out of the trade. So there's always a chance, but to get out of the trade. But unfortunately, that opportunity was missed. So now we're in the realms of probably more macro management rather than micromanagement. This is a micromanagement area, really, that could have taken profit. But now I'm in possible macro management territory if this market pops forward. But just looking for it to come down. As I say, daily pivot will be just about enough to give me a break even over the course of this and many others. But I at least need to see this. Anything under that, then I'll be slightly in the money. So I'll be more than happy with that when a trade goes against you and you can pull something out of it, or at least get out without too many scuffs and scrapes.
Do you normally use 3 pins or 4?
What to torture myself with?
when you're juggling. It's a bit of an act, isn't it, really?
Oh yeah, man. Yeah, this is.
In the show. That's why we said yesterday, you know, if you're new to trading, you don't want to be taking on hedging in live trading. It's a tough game.
I'll tell you what was interesting as well. Oh, sorry, buddy. This is the FTSE, Mohammed. This is the FTSE futures that I'm looking at here. Let me just bring you back the screen. What's interesting as well is that it's been such a long time since I've had to hedge, because most of the trade setups have worked out. So it's been such a long time since I've had to hedge that I'm really out of practice with it. And I was thinking about it yesterday. I'm thinking, geez, I'm kind of rusty on this hedging, having to do the hedge malarkey. So you know, my mind just was not clear. It was really bad. You know, just how and as it was going on, I was waiting for an opportunity like this just to get me out, so I could kind of clear the boards again. But as I say, I was almost in the nursery, and what they don't allow you to do is set a target here. I think you can with the trade manager, but when the market's up here, you can't then put a target in place below. I don't think you can. Maybe you can actually. Maybe I just made a mistake on where my target was. But yeah. So far, so sweating, I have to say. Just see how we get on anyway. But yeah, let's pass it on to you and see what there is out there for the guys to be trading in the currency world.
All right. The order I've got is actually a couple of things to update. Euro yen, that trailing, it was a trading stop, has now been hit. So we've closed that one. We took profit twice, which is cool. And our stops were at entry. So 2 winners, 2 winning positions on that one, and no losing positions. That's a good thing. Euro pound still going. I'll update you on that in the not too distant future. And the only other order that I've taken this week, actually I took one last night, a small 0.25% euro yen trade. That was about to say that wasn't very good. It didn't give us much of a show at all. So that one was a wee loss, I'm afraid. We'll endeavour to rectify that situation with this trade. Now, there's a couple of options here, as I was telling the guys this morning in the this morning TTR show. I like this bar here, but I don't love this bar here. I like it because it's at a resistance level. Not a real strong confluence area, although we do have the daily pivot sitting there. I rather preferred, funny as it may seem, the 4-hour chart. Now, the 4-hour chart gave me a big bearish engulfing bar, followed by a, tough to say, a decisive bullish bar. It's more of a spinning top, which Ash loves to trade, don't you, Ash? And not. And it double crossed the daily pivot, yesterday's daily pivot I'm talking about, of course. And I think that's a better entry. The problem with this one is we've got to get profit off the table very, very quickly, because there's support dead ahead. So I've got my first take profits very, very close to entry at about 11 pips. I'm going to knock a third of the position off at that point, and hope it gets through there, of course, and heads towards the weekly pivot, where we'll take our second profit and then let the rest run. Now, clearly we're in a range here, so I'm looking for a breakout of that range. The best thing that could possibly happen here, however, would be that we actually get a lower high sitting on this 151.12, as I've got it, 151.12 level. So I'd like to see price get up to here and then give me a high test bar in that vicinity or something like that, and then I could move my entry, or at least put a second entry in, if that were to be the case. We've now had a test of the daily pivot, so that's not as scary as it would be otherwise, and therefore I'm happy to do that. If you want to follow the trade, the entry is at 1.5073. We've got a stop loss of 33 pips, which just gets us above this trend line, which of course has now been smashed. and resmashed. So I wouldn't use it as a trend line anymore, but that's where my stop loss is. And as I said, we're taking 1/3 of the position off at 11 pips in profit, and we're closing a second third of the position at 41 pips in profit, which is just above the weekly pivot. So essentially we're trading breakouts, but on the back of this bar here, the most dominant on that particular area of the chart, of course. So we'll look out for that one. What else am I thinking? Dollar yen, I was thinking, wasn't I, this morning? Was I thinking dollar yen this morning? Yes, I was, and that's why. If you were in the show yesterday, you'll recall that we were speculating, I suppose is the right word, that too early to go short here because we saw this confluence area here and thought that that was pretty much a, not sure what I called it, but I think it was something to do with if you're ever going to put your house on something. No, I would never say that. It looked to be a reasonable proposition, let's put it that way, that we would test that level, and sure enough, we have done exactly that. Considered trading this morning, this bar here, but the reward to risk trading straight into the weekly pivot is pretty dismal. It would be way less than 1-to-1 by the time you put your spreads in, stop loss, blah, blah, blah. So I thought best way to trade this, if there is a good way to trade this, is let it come down to the weekly pivot if it so wants to do, and then come back into this area, give me the lower high that I'm seeking, and then look to trade it short, if indeed that is to be the case. The second way to do it would be on the 4-hour chart or even a smaller time frame. Wait till this double top, if you like, provides us with, or the market chart, if you want to call it, provides us with the lower high in this vicinity, or even here would be okay. Then we can trade it short from there. Why am I so biased short when it's way counter trend? Well, really the issue is not that I'm so biased short. It is that, and I'll if you follow Ash and I in these shows, you'll get to know our little idiosyncratic tendencies, I suppose. But when I say this is what we'll do, it's a matter of this is what we'll do if this happens. It's not a matter of saying, okay, here's the crystal ball, and the market's going to go to here where we'll go short. It's a matter of if the market goes here, then I'll react in kind. So I'm actually not saying that the market's going here. So please don't misunderstand. Some people might think, okay, if you're saying the market's going there, then shit, we better trade it to there. That's not the case. If I feel that is the case, I'll certainly tell you. But at this point in time, I'd rather see the market here, not yet ready to trade it there. There's a big difference. So if I do get that lower high sitting here on the back of, if you like, that big double top at this big resistance area and confluence area, that's what I'll be seeking to do, trade dollar yen short. And I could probably look at that on 30-minute chart also. 30-minute chart is the area, if I am to trade counter my bias, that's pretty much where I will trade it. So if it's set up here, showing me that it wants to go to this area or this area here, then yeah, I'm happy to do that. It would be reduced risk, of course, because my overall bias is in the opposite direction. But it doesn't prevent me from taking advantage of what I see as available space and available pips if they are on offer. So, not seeing that at the moment, but yep, certainly give you a hoy if I do. Euro dollar, my favorite playground. Now, yesterday I spoke about euro dollar. Ash and I are having a conversation about euro dollar, and I think everyone was kind of ready to go along this cross at that point. And we were saying, no, don't think so, not yet. And that's proven to be wise counsel at this stage. Whether it's now a possibility to go long remains yet to be seen, but we are now at the vicinity or the area where I said I would be willing to go long. Prefer down here, but here's okay. Why? Because of this low here. So this low is matched by this reversal bar, and we're now in the vicinity where we can look for that to convert into a trade. Am I ready? No, the market's not telling me it's ready yet either. And what I'd really like to see is an absolute defined low here. We've got potential for this to be a double bottom, of course. That's okay, but I won't trade a double bottom at that point. What I will wait for is a second chant or a second, or a confirmation, if you like, of the first pattern, and I haven't got that. So what I'd really like to see here is a bounce off daily pivot down to here. Don't take the low out and give me a higher low, and then we can look to trade long. Better still, even if we were to come down to the bottom of the range here and then do exactly what I've just said, I'd be willing to go long at that point. Am I willing to go short is the question, and the answer is yes, always, if I can see an opportunity so to do. Now that may come, but I don't see it anytime soon. The only time I see it is if we get up to this area here. This area here, there's a short available from this level, but I don't see a short available from this level right now. Too close to the support. It is a double bottom. There's potential for this to turn around, no question. And if I see a defined or stand out, like a pair of DBs, then we'll have a look at that. But at this point in time, the major and most defined pattern I see on the chart is this tweezer top sitting here, and that's why we're still in bearish mode. So until that turns around and I see something that counters that or even overrides that, then we're still in bear mode. So that's where we're at. On the euro, euro pound, the trade that we are still in, of course, and hopefully for some time yet to come, it's kind of tossing around, isn't it? There's a little bit of toing and froing going on here. We burst through to the monthly pivot there yesterday at some stage and get back down. We didn't maintain that surge for very long. Candle that's forming now on the 4-hour chart is a little bit interesting to me. The question, of course, remains: do I want to add to the position that we're already in, with our stops at entry here having banked twice? And really the answer to that question is not really. But again, if I saw something that was absolutely compelling, then I may choose to do that. The reason I say not really is a big hint that no is probably the answer. And it's because really we don't know too much more at the moment about Brexit, or Ash may update us on that in a minute. I don't know too much more about Brexit than the market does. And the market right now is saying, okay, enough's enough. We'll just settle here until we get something that's a little bit new in terms of news, and then we'll reassess. So that's what I'm seeing the market do at the moment. It's hanging around the pivots, and I don't see any reason to jump into this either way right now. Happy to be where I'm at.
There's not too much in the way of Brexit right now. That was the other thing that really kind of scuppered me yesterday. That there was an announcement yesterday from somebody that I'm not exactly sure what the announcement was, but it was fairly negative, and it had a negative effect on the pound, which is why we saw that spiking around. And it was another thing that just kind of destroyed any downside with the FTSE. Interestingly, the euro is bubbling around, and it's going to be about tomorrow, isn't it? Mohammed is saying the euro pound has not been good for him.
Can I just comment on that, if you don't mind?
Sure.
Mohammed, I'm assuming that you've been trading it on smaller time frames. Am I right? And if I had been, I think it would have been disastrous for me as well, because it's so volatile at the moment. You know, if you're trading intraday through here, you know, on smaller time frames, you are really beating your head against a brick wall. To trade successfully in here at the moment on smaller time frames, you know, takes a fair bit of skill. It's almost to the point of scalping. Daily time frame, okay, that's interesting.
Daily time frame. Let me just have a look at that. What strategy was that on, Mohammed?
I'm just having a look at the chart to see where you could be going wrong. Daily time frame. You are trying to trade it short, I assume. Hang on. Okay, we're hanging on. No dramas. Mate, we've got it open whilst Mohammed's doing that. You don't need to do anything, of course. You're
no, the FTSE is out the blocks with some aggressive buying already. So this market is not coming back right now. This first 15 minutes is going to be quite key. What we did see, you know, straight away as the market opened up was a fling to the downside. You can see it best expressed on the 5-minute chart. A fling to the downside, but then that just catapulted straight back up again. So like a rubber band, it reached its expansive point down here, and it has just flown straight back up again. So every chance that that it's going to try and get back to these highs and probably beyond as well. So no, there's not really a lot for me to do. I mean, the only other option would have been to try and get another hedge on, which I'm not really that keen on. It's just the market is kind of volatile, but obviously kind of volatile in a very, very positive way right now. So got to be calm, and the only way I can really be calm is by allowing the market to calm down, and at this stage it's certainly not doing that. So I think we're probably going to get a surge here back to the upside, and at this point
of yesterday, but far quicker and on steroids.
Well, absolutely, yeah. Now it's fly, and you tend to see this with the FTSE. You know, when confidence is in the market, they're just there's a flurry of activity. And I'm going to wait for this 7,200 level and see if that can just temper it somewhat. I mean, this would be really another point to try and get in the shorts, and then look for the halfway mark, which is going to be somewhere in about here, somewhere about there. So this could be all right in many respects, because if I can somehow get in a short here with a halfway point between the original trade and a take profit level here, then that's gonna blank out this trade. So it's just whether firstly we can get the short on safely. Well, that's going to be the key aspect here. Can I get a safe short on at this point? And if I can, then I'll get into it. Because the problem with it, obviously, it could just continue to explode to the upside, and then I'll be in an even bigger headache. It wouldn't be all sorts of trouble. It's just going to be a bigger headache. If that continues to fly up here and beyond, then it's going to be a very, very tricky market for me. So we can see from the first 5-minute bar that there's a lot of confidence so far. Look at that. I mean, a fling down and then just flying back to the upside. So there are going to be a lot of people interested in just trading the top of this bar. There is a bit of an issue with stops. There's a bit of issue with over exuberance, but certainly the way that this bar looks, it doesn't suggest that this is on a downward trajectory anytime soon. So yeah, I'm just going to wait and see if I can get up to this point here. The good thing about this, in many respects, is that I quite like an over-exuberant market to a point of resistance, because it does suggest that there will be people that are more than happy to ease out their positions when the market get so aggressive. It's almost like the final throes of an uptrend does have these characteristics. Now, that's not to say that it will happen, but it could. If we get the final throes of the uptrend just flying up to this point, then we can go take another short on. The issue that we're going to have to really consider is this next level up here. So when I'm looking at this, what I'm doing is I'm thinking about the maths and the account as well. If I enter again here, I've got 2 trades on, which is going to lead me all the way up to here, and that's near 200 pips. And if you think that I've already got one on down here, that's going to be 250. That's going to be around about 450 pips, going in the opposite direction. And now that's not to say there won't be a hedge in between these 2 points, but the danger is that you get caught in a trade like that. So you've got to make sure you've done the you've done the maths on your account if you're going to be doing this kind of thing, to make sure you can absorb something like that, because this is an obvious short. Obviously, this is a really obvious short, and at that point, I would suspect that there would be a better midpoint. And if we get up to that point, then we are looking at probably coming back down to somewhere around there. So it will test this level at some point. So we've got to just think slowly here, mate. Let this market develop itself and do what it's going to do.
Yeah, okay. I'm not sure you've part answered Christo's first question on the hedging, how to work out. Obviously, Christo's come in after you've explained that earlier in the show, so a brief overview for him, I guess.
Yeah, let's look at gold later. Hedging strategy, it only works if that's your personality. I mean, that's just the way that I like to leave things as they are on the whole. It just doesn't suit me to kind of have to make I mean, obviously, when you're starting to hedge, you are having to make quite a few decisions, because you're just you do get kind of caught in trades that go against you, and then you've got to start thinking. No, that's okay, mate. That's okay. But it's not necessarily better. I mean, I wouldn't say it's a better way to trade than just using stops, conventional stops like everybody else would use. I think that using a conventional stop is just as valid. But I like hedging, because it just means that and it's not always hedging. This is the thing. Sometimes you're stacking up. Yes, I took a hedge yesterday because I was close enough. But this is the thing about the hedging. Doing a hedging strategy, if you like, or managing your money with a hedge, you've got to do the maths on it. So it's a completely different challenge. It's not really about the charts do come into play, but the charts come into play with a more kind of advanced and intensive look at money management. So it won't always be a hedge, Sometimes it'll be that you're stacking up. I go in short here, that doesn't work out. I go in short here, find a midpoint, and then maybe clear out the trade. So it's really just a way of kind of doing the same thing, if you like, having a stop, but just with a slightly different methodology. The other aspect of this is that I've made money on the hedge. So all I really need to do now is no, I don't, mate. No, I don't. I don't trade the. I don't do options. Not that I'm against them, but I have come pretty late to the party when it comes to options. So I would have to do quite a bit of education for myself to kind of get into options trading. And I'm not adverse to it, because I was chatting to somebody about options trading, but but it's not my game. But I would like it. I'd like to get into it, because I understand that it is another way that you can kind of do a kind of hedging strategy. It's another way that you can approach the market with a hedging strategy. So not against options by any stretch, but yeah, as I say, I'm just a bit late to the party with options. So I'd have to do quite a bit of work, and I'd have to get somebody who was very, very good at options to make sure that they could actually fit it around what I do already. So right now, my approach is really about certain setups, certain fundamentals, and then money management, which is involving hedging. But money management can involve stops just as successfully, if not more so. And it's certainly less stressful in many respects. But I just like to leave things on the table. I like to let things develop rather than having to make two quick decisions, because I know what I'm going to do here now. I know that I'm going to go short here as long as I get something which suggests that I should. And if that doesn't happen, then I'll let the market go and then go short at this level. But there might be a hedge somewhere along this this area between this point and this point. So I can just kind of just leave things run. But I kind of like to have skin in the game where possible.
Okay, let's go back to Muhammad's question, which is really interesting. And you said you entered Euro Pound on the 27th, which would be this bar here, I take it. That's the 26th. So you've gone in here and started looking okay. Am I right? Is that the bar you entered on? So you've entered the market here around about the 85.92 level or something like that. If that's the 27th of the 2nd, which is where you said you went in. Look, just one basic thing from me. If you can find a way into a winning trade, doesn't matter how you do it, just get in there. That's a fact. But if you're trend trading, which is what I assume you're doing, then the basic tenet of trend trading is to buy the dips and sell the rallies. So if you're getting in here, you're not selling a rally, you're actually selling an overextension. So that would be the most obvious thing I can see that would be an issue with that trade. Yes, you've broken the lows, there's no question. Yes, the pivot is coming down, but really if you're trend trading here and you're not in the market already, you probably need to wait for this retracement to get into it. So sell the rallies and buy the dips. That's if you're a trend trader. And really nothing much changes, to be fair. If you're not a trend trader, if you're trading something else, you're still looking for those dips and rallies. You're still looking for the price to come off a resistance or a support level. So if that can be a takeaway for you, and you're trend trading, just an awkward place to get in the market right there. Really is. To go short, that is. Anything, Dash?
Yeah, no, I completely agree with that. And this is the thing, you see. This is where I look at the FTSE and I see a really, really exuberant market here. But you have to watch for this exuberance, because this is a really good example. The market absolutely bombed down here, and it bombed down to a point of support. And the thought here would have been, this market has got so much inertia coming down that it's just going to keep going and going and going. But what can happen is that people just get to that level of support and then they want to clear out, which is why I'm looking at this and going, right, where's the level of resistance? Because with an over exuberant market, the sellers, the buyers just dry up. There's no more buyers left, or there's very few buyers left when you see these particular bars. So let's come back to that Euro Pound. The Euro Pound on the 27th. You had a lot, where's the 27th of Feb? This one here, this bar here already was starting to get overextended. So you shorted on the 27th, somewhere on the 27th. So yeah, this bar here was already starting to get was starting to get a little bit exhaustive, but it had broken through resistance. So because it had taken out resistance, there was still going to be another leg to the downside. But let's just mark this area off down here and look and see if there's anything supporting this price. Actually, not a great deal. Well, there's a little bit. Yeah, actually there is. We bring this right down to the lows here. There's a little bit supporting this price. Not absolutely brilliant, but there's a little bit supporting this price. Now, what is what's the normal reaction of a market? Is it will oftentimes, not always, but it will oftentimes test where it's come from. Now, this is where it's come from here. This point here, that's where it's come from. Now we will go back to the dailies. You can see that this point here had not tested this point. So until it tests this level where it's come from, that's the point that you're really looking to go short. You want to go short on the second rejection, if you're on the first rejection, if you like. But without a first rejection, then you're at risk of a dead cat bounce, if just to use a market term, where the market can just kind of come down and start to fly back to the upside again. And that's really exactly what had happened. You really want to see the test. I mean, that's as a trend trader, as Jeff says, you really want to see a point tested before you start to consider those shorts. There might even be, I don't know whether there's other areas. I'm always trying to find reasons why it bounced where it bounced. Nothing there. Nothing there. No, there's going to be a reason that it would have bounced there, but I can't quite find it. That looks like the most obvious line there. This is a really interesting line here, actually, because look at how price action is developing. So this line actually does look like it is the line being watched. So as the market came back down here again, even if we're looking for it to go short, it would have to retest this area to make sure that there was enough momentum to continue to the downside. But this market had already been significantly oversold, significantly sold off, and the sellers just probably dried up. For a period that people just get exhausted with making money. So the sellers had kind of dried up at this point.
They like to take things called profit as well.
They like to take things called profit, yeah, and all that ends up happening is that as the sellers kind of start drying up at a lower end of a trend. I mean, that's the other thing you've got to consider. You are at a lower end because we are breaking through some significant lows here. As it comes down at a lower end of the trend, really, all that can end up happening is that the buyers overpower the sellers because there's more of them. There's more people motivated down here because the sellers are starting to go, that's getting a little bit expensive now to continue to try and make money. I want it next time I want to get in somewhere around here or on a different trend line. So you're looking when the market becomes cheap or expensive to try and get a trade on. Now this line I would also use. So the next time that I'd be looking for a decent selling opportunity would be probably somewhere in this area. If the market pops up and it's got some confluence, it'd be probably somewhere in this area. But down here, you've got nothing to bounce from. And that's the other aspect of this. When you see that the sellers the buyers come back in, where are the buyers likely to take it to before it bounces again? And it's this level because this was the level of breakout. So that's your short if you're going to be trading any kind of market at the lower end of a trend. That's your short there. But this is not a short because it's already gone. That's what you've got to consider as well. The market is already gone. There's not much left. Even if this is an opportunity, there's not much left for us, particularly on a daily chart. It's got to have a chance to kind of wind back up again and then go. It drops, it winds back up, and then it goes. If you'd gone short here, yeah, you could have got some bars, some price action and some profit out of that. But much better to go short when it comes back up to that, the level it came from before, which is here. Comes right back to the level it came from before, and then you get the chance to go short. So the retest is very key. Retesting an area is really key when you're trying to trend trade.
Or any trade, in my humble opinion. It's golden rule that really is very, very valuable to learn.
Yes, it is, because actually, even if you're trading a range, then you still want the either side of the range to be tested. So if you see a long price bar, no, mate, no, it's not. Well,
it's kind of not necessarily. It depends on its location and context.
Yes,
there's always something else.
Yes, do you know what? That's the key. The location is the key, and just to bring this back into context a little bit, this is a pretty long bar, but it's a long bar that was at a high, and it was a long bar that took out this area along here. It took out the area of support fairly significantly. So if you'd gone short at the low of that bar, then that would have been fine, because you are going short at a higher level. But certainly when the market starts to become, when the market gets near support, then to go short below this bar, let's say, would have been a bad decision. So what you want is, if you're going short, you want the market to have be near a high of whatever phase it's in. Then a big bar is not a problem. Then but to go short when like I wouldn't have gone short under this bar, for example, because it's way too far away from the high at that point. Sure enough, it did continue to go down, but that to me wouldn't have been a worthwhile trade, particularly because we're so close to an area of support here. And particularly if you're swing trading, if you're swing trading, you're looking for the market to move up, down, try and go long, up, down, try and go long. But these bars here, as this area here is so close to an area of previous resistance, and that's the first thing that you want to be making sure that you are aware of. Where is support and resistance on any of these charts? Because if you're trading right into a level of resistance, then you're going to be in trouble. Now this one here was through resistance. I guess you could say that was through a resistance level. However, it hadn't come and retested. It hadn't refused the area that it broke out from. It hadn't had that opportunity. So really the takeaway is to wait and make sure that you get a retest, and make sure that you're not trading right into support and resistance areas. You want to try and go short where there's a resistance point, and you want to go long where there's a support area, rather than the reverse of that.
Talking my language now. Talking bounces off support and resistance. Great way to trade, especially on the intraday charts. So, yeah, look, I know we're probably a little bit confusing there, Mohammed, but it really does depend on where those bars are located and what they're telling us. It's all a matter of, real estate, location.
Yes, it is, yeah.
Different.
It is. The location's key. And the thing is, with the location, the first thing that you really want to be doing in the morning when you start trading is finding your areas. Where's support and where's resistance? And if you're looking on daily charts, we could go through any of these. Let's just quickly have a quick look at the euro. Right, support straight away. The first thing I'm doing, I'm looking at this lower line, and I'm looking at this lower line, and I'm going, that area there is an area of support. If I go short anywhere along here, that's going to be a first target. Is it worth it? Probably not. Where's the area of resistance? Area of resistance, there's some up here. So my last 2 points are going to be up here. So that this point here didn't quite get there, but that's an obvious zone to start looking for setups. So mark off your points of support and resistance, and you can do it. You can do a few of them. It's not a problem to kind of do a few. And I tend to do some horizontal lines, do some trend lines, but try and get good at finding areas of support and resistance, because at that point, now I see that this is an area of potential support. That's all we got. Now I can start seeing, is there a setup here? Because if there is, then I'm probably going to take the trade, because I've got some room to trade to the upside. And this is where my risk to reward ratios start to come into play. Do I have enough risk to reward to make money out of this particular trade? Because if I do, then I'm going to be all over it. But I want to see a setup. So the first thing is find your levels of support and resistance. The next thing that you're doing is setup. If you go setup first, which is the mistake that I think most new traders make, if you look for your setups first, you are not giving yourself a chance to get context in a setup. If you're trading the daily wave rider and you've seen super trend is red and the weekly pivot step down, so you're looking for a short, but you haven't marked off that there's a resistance point there, you're going to be in big trouble. So you want to try and take these setups at the highest possible point if you're looking for a short, and the lowest possible point if you're looking for a long. And the only way you're going to get good at that is by finding on your charts where are the highs and lows. So that's the first thing that you should do. It's really good practice when you start your morning, to pick out your areas of support and resistance is very, very simple. Oh no, mate! This is the thing. I mean, this is the whole point. Is that the journey is a forever learning experience, and everybody's been there. But this is what I always say, is that there's no reason that it shouldn't be any of us that can make a success about out of trading. We just got to stick in there and do some simple things. And you know, I'm sure Jeff would say the same thing. When it comes down to it, the years of knowledge that we have, and the years of hours that we put in the market, actually we come back to something very, very simple. And the very, very simple fact is we're just looking for support and resistance, and then we're looking for a setup.
It's amazing, isn't it? As you say, all of those years and those hours spent looking at charts and learning the craft is very, very frustrating. And it can be very, very frustrating. That's why the community that you're in at the moment is so valuable to you. You can grab hold of people who have been there, done that, and just not even when we're trying to. I think, in fact, I think when I'm trying to teach people, it's far less impressive than when we're just talking, because when we're just talking is the most important time to listen, because what we might say is not out of a textbook, but it's out of experience. And I think that when I've listened to my mentors and people who have actually impressed me with very, very simple things that they do, but they do it very well, and they do it religiously, and they do it with a massive amount of discipline, it's just an enlightening lobe coming on moment where they probably weren't even trying to tell you something, but you just get what they're saying. And when you get what they're saying, that light bulb comes on and it's, oh my God, why didn't I see that? It was so simple. And believe me, Mohammed, that happens to me to this day well, not every single day, but because of the community that we're in, we get to share things, and things that I've taken on board in the last couple of years in particular, after 10 years of trading. And now I'm into my 12th or 13th year, I can't even remember. It still happens. So you still learn things each and every day.
Mohammed just said, yeah, I do setups first, price and trends. You caught me. Mate, it is a common mistake, and I did the same thing, which is why I know that's the issue for many people. I was doing the same thing. The guy that taught me to trade taught me his setup, and all I was doing was going around the market looking for something that goes, there's a setup, boom. And there's a setup, boom. But it actually doesn't come down to that, because when and this is the way that I always think about it, is that there are a plethora. I can't say how many setups there are, but there are a plethora of setups out there. There are a plethora of strategies. But when it comes down to it, what are those strategies trying to do? They're trying to get into the market at an area where they think the market is the least or most expensive. The best price, let's say it that way. They're trying to get into the market at the best possible price. Now, you don't need a moving average or even a pivot for that matter to recognize where price turned. You just need a clean chart and look at where its price turned, and then try and figure out why it's turned there. That's and this. I have to say I'm a little bit confounded when it comes down to the pound, because why it actually turned at that particular point, I haven't yet found. I've marked out a few lines, but there's a reason. There's something down here. There's some level down here. Maybe it's a round number, is it? No, I don't know what it is, but there was a point that it comes down to that area. But what I do know is that if we can get good at finding those areas, then we're going to make money regardless. And really, that does come down to a lot of scribbling. I find you have to scribble all over your charts and put as many lines on there as possible. Use Fibonacci's and moving averages as confluence, But the first thing I would do is take a clean chart and just draw some lines and see if you can get good at finding areas where the market finds support and resistance. This is a really good one here. As the market comes down and breaks out this particular level here, then you're looking for shorts. You don't need a setup to know that the market has broken through an area there of support, and that's what you should be doing first. Has the market broken through an area of support? What's that, mate?
That was my entry, that green bar.
Oh, there you go. Was it?
Yeah.
Oh, there you go. Jeez, man, that's a killer trade.
So far, so good.
That's a 7-1. Oh no, 6-1. Nice. Well, there you go. You see, and that's without. I didn't even know that, but that's what Jeff has done. He's looked at an area of support. Support is broken, and then he's looking for a setup to get himself in. His thinking has been satisfied. This area should hold up. The area fails to hold up. Right? How can I get in? And then you, as I say, you've got a plethora of strategies that may well get you into a market after that. But yeah, as I say, mate, easy mistake to make. But I would always start with a clean chart.
Okay, awesome. Thanks, guys, for all the questions. We've now gone past the bottom of the hour, and let's take a look at the 30-minute chart, shall we, to see if there's anything that we need to take care of. Remembering, of course, that I'm starting with EuroCAD. Got a little bit of a bearish tinge to my bias here on this cross. This is almost a trade. Let me just see. Close. I'd have to get my entry under there, which doesn't give me a lot of space. Spreads are 2.5. No, it doesn't give me enough room. What I'm looking at here is the low of the day, and I've had a rejection of the daily pivot, right? So I'm looking for that to be confirmed. Now, if it's confirmed, we're going to see new highs. If, however, this is just a little speculator that's gone to resistance, then we're going to see this come back through here and potentially take on lows. The problem is we've got the low of the day, which I never trade into. If I'm trading into the low of the day or the high of the day, I've done something wrong, because it's totally against my rules. Why? Because of what we were just talking about before. Been burnt too many times on that particular part of the trading scenario. But this is a point that I'm gagging about, because I see this acceleration point through the bottom of here. If price comes to here, I think it's going to accelerate. What I will wait for, however, is for the low of the day to be taken out, and what we were talking about before, let it break, let it retest, then I can look for a trade. So I'll leave that one alone, and I've still got the 4 hour in place as well. That's underneath this bar here, and I'm still looking for a better entry. That's a fact. Euro pound, we've been speaking about euro pound. This is the 30-minute chart, of course. I don't see anything there that enthuses me. We've got high test bar, low test bar, high test bar, and it's all around the daily pivot. So nothing there for me. Euro yen. Yeah, again, really nothing there that's an enterprise bargain, I can assure you. There's that little trade I tried to take yesterday, above the high of the day, mind you, and I was looking for a breakout, didn't happen. 0.25% loss on that one. What have we got? I don't think we've got another opportunity until we get back to here, to be fair. So this is the area I want to trade from. Let's get price up there, then we can start thinking about what we're going to do next. Euro's had that little breakthrough of this trend line. In many ways, something that I would like to trade, but again, if you have a look at entry about there, high of the day there, there's no room for profit. And the daily pivot's only 8 pips away as well. So best case scenario is to get priced to here, again exactly the same as I just mentioned on Euro Yen, and then look for something, because price, once it hits a confluence area, will do something. All we need to know is the signals that are provided to us by the candles. But here's where I want to trade from, not here. Aussie in trouble, the Aussie today. Poor old thing. As I said from the outside, saw this coming with a little bit of a news. I won't call it insider trading because I didn't trade it. Wrong time of day for me, of course, but yeah, I could see this one coming. In fact, I was told this was going to happen and didn't do anything about it. So there's no point me saying I can cry over spilt milk, but what happens next? Certainly can't trade it long, and I can't trade it short. I could trade it short if I considered 65 pips is not enough for this. That's another thing that comes into my calculations. The average true range, I'll just spend a little bit of time on this because I know there are new traders in the room, and I want to explain exactly why I do what I do. And what I do here is look for something called the average true range. Now, the average true range of Aussie dollar looks to be around about the 40-50 pip mark at the moment, very, very low, I would think. Depends on how far you go back, of course, but let's have a look at that. Indicators, average true range. Let's go back. Let's go back. How many days? Go back to the beginning of the year, shall we?
Just to quickly, mate. What the Aussie dropped today, Chris, because of the GDP number.
Yep. Let's go back to the beginning of the year. So what's that? 2020 for about. Let's go 50 days. If I'm on the 30-minute chart, that's not going to work. I'll have to go to daily. Sorry, guys. Daily. Insert indicators. Average true range. 50. And that'll come up in red. There it is there. The average true range this year of the Aussie is 64 pips. Isn't that a coincidence? How far have we moved today, guys? Bullshit.
Now, can I just ask? Did everybody understand that? Did you does everyone want to see Jeff do that one more time? Because this is a pretty useful tool. I know some of you probably use it anyway with the flow, but this is a useful tool. So if everybody understood, fine. But if anybody wants to see Jeff do that one more time, bring up the average.
Yeah, just say so and I'll do it again. Too easy.
Didn't do your homework, mate. Yeah. This there's a little bit more detail in that actually, which we'll get to later on. But yeah, well, we'll talk about that stuff in a second when Jeff has finished this. Yeah, if nobody else needs to see that, that's fine.
Again, please. Okay, too easy. Right, let's get it off the chart. Delete indicator. Okay, so we're going to go to the daily chart. So select daily chart. Then go to insert indicators and go to average true range. Click on average true range and just select your period. Look, if you want to know what the average true range is, and I'll give you a little insight as to who's the most prolific user of average true range that I know is a super trader, and he uses 5 days only as his average true range. I'm not going to do that because I've just proven my point's just been proven by going back to the end of the year. I'll do it both, okay? The beginning of the year rather. So I'm choosing 50 days because there's roughly 50 trading days between now and the beginning of the year. I haven't counted them, but that's rough. There'll be roughly 50 days. Okay. So then you select whatever color you want to see it as, how thick, etc., and press OK. And up will come this indicator down here, which shows you the average true range of the cross over that period of time. Now, the average true range is, in simple terms, the average daily range of that particular pair, that particular trading pair. Okay, I won't go any deeper than that, but just take it as read as that's what it means. It's the average daily range of the pair over that period. So if 50 is my period, which it is here, it's telling me that 64 pips is the average movement of this pair every day. Okay, so it might be 20 here, it might be 80 here, it might be 40 here, it might be 70 here. But the average over that period of time is 64 pips. And lo and behold, when I look at today's candle, it is 65 pips. So that's telling me everything I need to know. Because I want to trade high probability trades, I do not want to go short here right now, no matter what, because two things are in play here. Number one, I've just looked at the average true range for this year for this pair, and it's 64 pips. I'm bang on that number. I'm also at the bottom of a range, a current range, and I'm also at a support level, a strong support level. So for me, just to go short here is tantamount to suicide. Now, I'm not saying for 1 second it can't disappear, because we've had a fundamental announcement that can drive this. We're talking averages here. We're not talking exacts. We're not talking definitive numbers or anything like that. So this can easily go a third phase today, no question. But is that the highest probability? And the answer is, you tell me the answer. We've just demonstrated to ourselves that it is unlikely, no matter what, that this cross will go much further today. Yep, absolutely, Christo. Not saying it won't. I'm saying the probability of it doing it ain't good. And that's why it's so tough to trade short here right now.
That's brilliant.
Okay.
And again, this is where the tools start to come into play. So we're looking for the simple aspects of finding support and resistance, but then the tools come into play. And just to quickly talk a little bit about the Australian economy, that it's really quite worrying for Australia, because they've had bad GDP, but also there's a potential for a couple of rates. Cuts as well that they're talking about. So rate cuts are always going to be bad for a currency, because it devalues the currency. So there was more than just the bad GDP number. The GDP number was an initial driver, and that's where the excitement comes in. But when you consider that, what Jeff's saying is to go short here is not a good idea, but it doesn't mean that he's not looking for a short. It just means that at this particular point, it wouldn't be wise. And this really comes back to that euro pound trade. It's not that the short isn't still on, but the area that you may be trying to get into might give you a lower probability. And if it ends up going, an experienced professional trader, as Jeff is, will just say, fine, I don't care, because I know over time this particular method will keep me safe.
Yeah, if I play the numbers will work for me. And that's exactly what I'm doing right there. I'm playing the numbers. The numbers are telling me absolutely that on average, won't go short. Don't think that. So don't jump into the market long here just because of that. But that's not the lesson. The lesson is going short here is very low probability trade. It can come off, absolutely, but it won't come off as often as it will fail. And that's the whole point.
And this is the thing, when it comes down to try and get into a market, in a lot of ways, and this is where the fundamental aspect of a market can really come into play. The fundamentals really give you a macro picture. They give you a big picture. They give you an overall sentiment of which way something is going over a longer period. But the micro picture is the setup. And if the setup doesn't exist at that particular point, then you just wait until it does. So we're looking at at two aspects. We're looking at trying to get an overall view of the market. Why is the Aussie down here? Well, for very good reason. Is it likely to bounce here? Only to probably give people an opportunity to get in short. So the short sellers are still there with their shopping trolleys at the ready, waiting for price to get to a point where they can actually put it in their basket. But at this particular point, it's not there. So we'd want some sort of retracement and a much healthier price, which is why this is when we start marking off areas of support and resistance and saying I want it to come here, and if it comes here, then I'll look for my setup.
Look, in my gut, the Aussie's going to 70 today, and probably lower.
Yeah.
But in my experience, it's not the time to jump in.
Yeah.
Right.
Now somebody was asking about gold as well.
Gold?
Let's talk about gold. I've opened that link you sent me, so we'll have a look at that after that.
Okay, we could be having the author of that come in as a guest tomorrow, hopefully.
Oh, amazing. Okay, all right. Let's definitely get onto that then. Okay, so gold. So looking at gold, let's just do some general analysis of this. So we're going to start with a daily chart here. We've got a trend line going up here, which it's broken through, which suggests it's a pretty nice area, this to me, because it's certainly broken through to suggest that the shorts are on. So my first thought is that I want it back here around about 1305. If it comes to 1305, then I'm going to be looking again for the potential for this to go lower. So that's my first thought on gold. Nothing else would suggest that. I could probably put in a fib as well. So now we're looking for confluence. Putting in a fib, that's a really nice move as well. That gets us to 38% retracement of gold as well. So there's some confluence in this 1305 area. Let's see what else there is. Now I can bring in my pivots. Oops, sorry, wrong chart. And the weekly pivot also sits in that area. So yeah, a lot to like about gold. If gold comes up here, obviously that weekly pivot's gonna change hands in the next week. So if gold pops up to this point in the next couple of days, that is my target for a short.
Yeah, I think probably if we look at last week, what was happening last week is risk was coming back on. Maybe if I've got a terrible memory going back a week, but I think we had rumours that trade wars were over or about to be sealed, deals about to be sealed. We had the summit with Kim Jong-un and Donald Trump, which was supposed to be a nice peacekeeping thing. Didn't turn out that way, but the market didn't know that at the time. What else did we have going on? A bit of positive news about the place. So gold wasn't in favour. Well, look at that. Are we going back to risk off? Don't know. Are we?
Well, I mean, so this is the interesting thing as well, is that you have to be nimble enough to see what's going to transpire here, and understand what the fundamental picture is telling us. And I have to say, at this particular time, yeah, you're right. North Korea rebuilding, Trump wanting more sanctions is not a great thing. the North Korean story was definitely a driver a little while ago, but the heat has come out of that a little bit, hasn't it? It's a bit like the story about Greece a few years ago. The heat seemed to come off that fairly quickly, and the market started focusing on something else, because the market is very, very good at pricing in certain things. But when things go a little bit damp, then they start to focus, the market will focus on something else. So North Korea at this particular stage is a little bit of a non-story. The story is still about China, but the interesting thing about the trade war is that we haven't really had any meat on the bones as yet. All we've had is some rhetoric that the deal is close, but the deal is not done. And I suspect until the deal is done, we probably won't get any significant moves, certainly in the stock markets, and that announcement of the deal being done, being delayed and delayed and delayed, then the buyers will start getting a little bit wary and a bit tetchy, and probably start coming out of position. So the sooner that announcement is made, the better, because the market can get ahead of itself, which I know they say everything is priced in, and to a point, it does get to that area, but when markets are overexcited, then it can kind of go way beyond where it should be. So yeah, I mean, I guess we are risk off at this particular stage. I don't like that Australian story, I have to say, mate, because when it comes down to it, Australia are very closely connected to China. We had yesterday the People's Bank of China suggesting that growth would be reduced, and that's not a particularly good story. There's further cuts that are going to go into the Chinese economy to help boost things up. But really, it's been expressed in what's going on in Australia, because they're such close trading partners. The housing market, particularly in Australia, sounds like it's in a bit of trouble, because investors just... What's that, mate?
It is, but
yeah.
If you get a chance, I read that that speech of Lowe's last night, and yeah, that's very sobering. It's enlightening. You might find that of interest.
Yeah.
If you're thinking Aussie trading, that is.
Right. So yeah, there's a few different things. Anyway, let's get to this. Let's get to this link that Jeff has sent us here. Where is it? Here it is. And you'll have to talk us through this, mate. Actually, how's this going to work? Because as you talk, it's going to flick to your screen, isn't it? I know how we can do it. Do we need to read the whole thing, or is it just the top?
No, it's just the topic. You only really need it's an ad at the end of the day. It's someone trying to sell you something, and that's not the whole point of it. The point of it is we were going to start a conversation around how best can we invest and future-proof ourselves with the potential for oil and coal, our fossil fuels, to become phased out. Will I use that?
Yep.
Let's say phased out. Let's not say extinct or never to be seen again, but let's say phased out. And I think if that doesn't happen, then we're probably all doomed anyway. So the probability is that it is going to happen with the weight of let's call it climate change awareness. Let's call it that. So what I think is a great topic, not just for today, tomorrow, but ongoing, is how can we future-proof ourselves for that, in terms of investing in new technologies, in renewables, in regeneration, all that sort of stuff. And this guy here is telling us there's a thing known as the forever battery breakthrough. Now, if there's such a thing, and that's why I wanted to talk to him, I've invited him to come on the show tomorrow.
Brilliant.
To tell us all about this. At this stage, he hasn't responded, but hopefully he will be here. If not, he might even give us a statement or something like that. So this is apparently, and again, this guy's trying to sell us something. This is Aussie developed battery innovation. Now, therefore, it's got to be bloody good, in of course. So tomorrow, if you're in the show, I hope to be asking this guy all the questions about what this technology is and how we can invest in it. I'm sure he'll tell us how we can invest in it. It'll be by subscribing to something he's selling, of course, but we'll get out of him what we can, and hopefully, if he does come in, we'll have some sort of a direction. Without, I'm not in any way, shape, or form trying to get you guys to go into this. I'm not spamming you in any way. I just want to know what this is, and this guy is the first port of call. I'm also going to investigate the universities of Australia, because there's a lot of technology going on in Australia, including this, that is hell bent on solving our power problems going into the future. So I'm looking for some professors of innovative change, and hopefully they can come and have a chat to us as well in the coming weeks.
Yeah, I've just sent you a screenshot if you wanted to put it on the screen as well. But this is definitely something we should be aware of, guys. Everybody should be looking, I think, at potentially investing in something that drives us towards a renewable future. I mean, obviously because it's a good thing, but also because there should be some money to be made out of it. And actually, what a great way to try and make some money. Actually doing something which is good for the planet, as opposed to just taking investments that will purely make us money, as they would have done back during the slave trading era of our embarrassing existence to a point. So this actually should be something that we look deeper into, and I want to bring everybody also to an awareness of a company called PodPoint, which is a UK company. Now, PodPoint are talking about infrastructure. It's the clue's in the name. It's all about electric charging areas that will be probably much more accessible and much more prevalent in the UK, and then potentially Europe and the world beyond that particular area. The reason that I'm bringing this up is that PodPoint have just had an investment that I think Legal & General, which is one of the biggest investment companies over here, insurance companies and pension companies, have just invested 13% into PodPoint. They bought 13% of the company. So that in itself is, and they are, they've got a really good record, Legal & General, but that in itself is flagging up that even if we don't focus on that particular company, that the big players are starting to shift into this market. Now, I'm not saying that this particular opportunity that we've got here on the screen is the right one either, but we certainly need to listen to it, because it may well be something which might make us some money in the long term as well. So I think anything that we can start looking towards a renewable future would be good for our pockets, and obviously good for the planet. So I'm quite excited to bring this guy in. That sounds really good. The power it from Melbourne to Darwin. I thought it was going to be Charles Darwin, but I guess it's not.
No, what they're claiming is that you can drive from Melbourne to Darwin, which is a bloody long way, well, 7,000 kilometres, on one single charge. Nice. So I'm super interested in that. To be absolutely frank with you, I think it's BS, and if only we can debunk it, that's then worth the exercise if we go through that tomorrow. And I repeat, we will not be trying to sell you anything at all through this show ever. That's not why we're here, but we're here to give you some options as to how you might invest your money.
Yeah, I'm interested in this as well, and this is a great thing that the guy's already got the perfect platform to come on the show and to be welcomed as Jeff talks about it, that it's BS. Oh, I'd love to be him. I'd love to be him. I hope he's not listening.
He could be, because I sent him a link. He may not come on. Although he won't be. Yeah. No, he'll want to make sure that he's well represented. So.
Okay. All right, mate. Well, let's wrap it up anyway. Just a quick.
Yeah, I've got no trades, guys, at the moment. I'm still waiting for setup, so not there.
So quickly, let's talk about the FTSE 100 because we just had the 9 o'clock bar closed down. I don't even know if anybody's in this trade, but interesting price action in many respects. The 4-hour chart hasn't managed to break through this upper line, which suggests that there's probably enough resistance there to possibly bring it back down to the daily pivot. I think the hourly is the most telling, though. Huge indecision. This is a spinning top. And it's a spinning stop with slightly bullish implications because it's a green bar, but spinning tops are really telling us that the market is getting a little bit edgy as it moves towards areas of resistance. So this I quite like, because if this does end up moving that little bit higher and getting us back up to these levels up here. Let me mark it off on this longer term time frame. If it ends up moving back up to these levels up here, I think that there's a fairly decent suggestion after seeing that that hourly bar that would be a trigger to get things sold off. Now there won't be a setup up here, so I will have to pretty much come down to some much shorter time frames, possibly a minute chart, but I'm not sure if I'll go that low. But certainly the 5 I'll have a look at and see if there's a trade entry there. If it comes all the way back down to this point, all bets are off. I'm just going to clear out of this and dust myself down to live another day. So the best case scenario would be for it to come back down and test this trend line, cancelling my trade out. Worst case scenario would be coming up, well, maybe not worst case scenario, but next best would be to come up here so I can short again. Worst case scenario is we take this area out, but I have to consider that there's, as I said before, there's no real meat on the bones just yet. There's no real reason for the market to take off because the China trade war hasn't lifted. It's just a suggestion that it's lifting. So without that lifting, then there's not really any reason to my mind that the market should take off here. So quite happy to look for shorts here and see if I can even this trade out. So one way or the other, I'm going to try and get clear of this by the end of the day, mate. Obviously, if all of a sudden a rabbit is pulled out of the hat and Donald Trump says the trade war's off, or he's impeached, which may not even be that much of a... What's that? Were you going to say there? Because there was something.
No, I was just grunting, really.
It could happen. It could happen. Yeah, Donald Trump is he's walking a precipice. This whole thing with Cohen that is currently going on, the guy is walking a tightrope. So because of that, who knows? That might be the driver. So if that was to happen, and then all of a sudden we tank to the downside and take this area out, I'm holding on. But that is the most unlikely, and for that reason, the least likely way that I'll be managing this trade too. But the idea is to try and get out at something of a break even.
Since that dude walked across the Grand Canyon on a tightrope, I've not seen a better tightrope walker than Donald J. Trump.
Try Theresa May, mate.
No, I'll be okay. I'll stick with Trumpy for now.
Okay, well, let's wrap it up. We'll be back again, same trade time, same trade channel. Yeah, go on, mate.
One more thing before we go. The EuroCAD order that I've got in the market is subject to what happens in how long? I haven't got a Forex factory, but there's CAD interest rate announcement and, of course, BOC statement coming up. If I'm not entered into this trade, which is what currently 38 pips from entry, I will cancel the order. Oh, sorry guys, I'll just have to.
Oh, I was getting down to that.
I'm sure.
6 hours, mate. 6 hours before that. The rate statement. Yeah.
All right. If I'm not taken into the trade, I'll cancel the order. If I am in the trade but not in profit, not having it past the TP1, I will move my stop to entry immediately before the announcement. Okay. So that's my plan of attack. If I'm in profit but not at TP1, I'll move my stops to entry. If I'm not entered, I'll cancel the order. Okay.
Great stuff. Have a great day, guys, and we'll see you tomorrow. Have a great day as well, mate, and I'll see you tomorrow as well.
Cheers, mate. Happy days. Bye for now.